In this video, I'll share with you why as a trading beginner, you should learn technical analysis and avoid fundamental analysis altogether. Hi, my name is Dennis, and on this channel, I share content to help you master trading, achieve financial freedom, so that you can live a life of purpose, impact, and fulfillment. So you might be asking yourself, what's even the difference between technical analysis and fundamental analysis? So let's start with fundamental analysis. So when it comes to trading, traders use fundamental analysis, compare the strength of one country's economy vis-a-vis the strength of another economy. So for example, they might look at economic data like the GDP, that is the gross domestic product of a country, that is how much money does a country generate. They might look at, for example, interest rates. What are the interest rates in that particular country? They might look at inflation. What is the current inflation levels of this particular country? They might look at unemployment numbers and be able to see, is unemployment increasing in a particular country or is it decreasing in a particular country? And based on what the numbers are in these particular different metrics, they'll be able to evaluate, is one country stronger than another country? But fundamental analysis also looks at news, like for example, political news. How unstable is a particular country? The other thing on fundamental analysis is, for example, let's say global commodity prices. Like for example, the price of oil, the price of gold, the price of diamond. So like for example, economies like Australia and New Zealand, because they are like a mining nation. So like for example, believe it's the Australia, they mine a lot of gold, and when the prices of gold in the market go up in value, their currency also goes up in value. So that's fundamental analysis. The basis of deciding whether you will buy or sell a particular currency is based on this particular news data, economic data, to determine whether it's a good time to buy or sell. And it's a very common strategy. So what about the other bit, technical analysis? So technical analysis is ideally using price movements on a chart of a particular market to determine where the prices would are projected to actually go to. The premise that holds on technical analysis is usually that historical prices can be used to be able to predict where the price will go in the future. And that can sound odd. I thought that is one of the things that you say, like historical prices can't predict the future. But technical analysis is actually based on that. So I'll break it down for us like into three. So one of the first ones is called trend identification. So you take a chart and look at it from left to right and be able to see, is the market going up in value, showing it like it's in an uptrend, meaning that you should be buying. And when, for example, is the market going down in value, meaning that you should actually be selling. So just by looking at daily prices of a particular forex pair, like for example, the pound against the dollar, then you'll be able to determine, like if, for example, the chart is showing that prices are generally going up, then it means one pair is actually going strong against the other and vice versa. So that's one of the ways in which technical analysis is used to identify the trend. The second thing when it comes to technical analysis is in the identification of price levels where markets reverse from. So what this ideally means is that using technical analysis, you can be able to find levels whereby when the price reaches that particular level, markets generally reverse to the upside, or when the markets reach that particular level, they reverse to the downside. So they're usually what are called horizontal support and resistance levels. But all you just need to understand is that technical analysis can be able to show you clearly from the chart that when a price reaches this particular level, this is what it usually does. And if it has done that multiple times in the past, there's a likelihood that it will also do that in the future. The other technical analysis tool are what are called candlesticks or price action setups. So those are fancy words, but all they just mean is that whenever a market moves in any particular day, it usually forms a pattern. A pattern in the sense that, for example, it hits a certain high before it reverses to the downwards. But these are not like difficult things to learn. They are ideally just price patterns that are formed as people buy and sell a particular market or forex pair in a particular day. All you need to know for now is that technical analysis also involves identifying these price patterns on the chart that can be able to be used to predict future prices. So the other technical analysis tool are what are called indicators. You might have heard of them. So what indicators are, they are usually calculations of price data to be able to determine different things about a market. So like for example, there are what are commonly called, let's say, for example, moving averages. So a moving average is just an average of prices over a certain period. So that is, for example, is used to identify what is the trend of a particular market. Then you'll hear of others, like for example, the average true range. Average true range in technical analysis is an indicator that people use to determine how volatile is a particular market. So don't need to worry about what they are, just to know that these are in technical analysis, there are also these indicators that people use to analyze the trend, when they should enter a market, and how volatile a particular market is. So on one side, we have fundamental analysis that is based on news and economic data, which is very factual and very intellectual in the sense that you can be able to, it gives you an understanding of how the market, a logical understanding of where the market could be. And on this other side, there is technical analysis, which seems as if it is just symbols on a chart, and there doesn't seem to be any form of logic in the sense of why would a certain market go up in value just because of price percentage in a chart. So that's usually the fight between the two people on the both sides, fundamentals and technical analysis. So which is better and which one should you as a trading beginner choose? So I'll share with you my story with regards to actually using both fundamental analysis and technical analysis. So I was introduced into trading around August of 2013, and I was looking for ways you can be able to make money online. So as I was looking about ways people trade, one of the ways was actually fundamental analysis. So I heard that if I can be able to use economic data, like for example, investing.com has an economic calendar whereby you can be able to know these are some of the news that is expected to come out, and this is what is being predicted would be the announcement. So what I started doing was I would open the economic calendar every other week and be able to base my decisions on what is being projected in terms of, let's say for example, there is something called the non-farm payrolls, which is still about employment data in the US. So based using that particular announcement, I will be able to make decisions on when to buy and when to sell. So I did that for a while, and unfortunately during that particular period, it was actually my first, since it was my first time actually trading, I actually blew up my account I think 2 times. So this was the time when I was actually trying to apply this fundamental analysis on my own trading. So after blowing up my account, after using fundamental analysis at the very beginning, I actually gave up on trading for a while. I think it was about 3 months or so, because I was frustrated that I've just started this particular venture and then I've just lost a lot of money, and I wasn't feeling confident in my trading even after that losing period. So I gave up for a while, about 3 months. Then I actually came back into trading. So after reviewing what I had done and seeing, was fundamental analysis really going to be the key for me? So before we check out the lesson that I learned, I'd like to share a free video training that I actually host called the 7 Steps to Financial Freedom via Forex Trading. So if you'd like to learn how to make a realistic income via Forex Trading, then I encourage you to check out the link on the description and sign up on the free training on my website on the 7 Steps to Financial Freedom via Forex Trading. You can also go to dennis.kirui.com/YT. So what I learned from this particular experience is that 1, with fundamental analysis, you cannot be able to know what exactly the market will do once a particular news item actually comes out. So just because you're able to predict accurately, let's say for example what the unemployment numbers will be from the US, you can't be able to predict whether the market will actually go up in value or go down in value just because you know that particular number. Then the other disadvantage with fundamental analysis, it also does not give you the price levels from which to actually be able to make your buying decisions. Because just because a particular economic data has actually come out does not mean you can buy, let's say, the pound against the dollar at just any particular, let's say the market price, just because the data has actually come out favorably or not favorably. So lack of that clarity actually now brings loopholes in fundamental analysis, making it not as reliable to be able to know how exactly to trade using it. So why is technical analysis better? So technical analysis is better because 1, it gives you an objective and a clear way to be able to know whether this is a right time to buy, whether this is a right time to sell. So technical analysis also gives you exact price levels to be able to actually buy from. So there is no mismatch in terms of wanting to figure out, should I buy at this place? Where should I buy? Where should I manage my risk? Where should I target? So technical analysis can be able to give you all those parameters so that you actually remove any form of emotion from your trading and subjectivity from your trading. And also when it comes to technical analysis, you can be able to easily test, does this particular trading strategy actually have an edge? Because with fundamental analysis, it is very difficult to do what is called a backtest to test. Do I have an edge when, for example, this in analyzing particular fundamental news, or is it just on a case-by-case basis? But with technical analysis, you can be able to objectively test it so that you can have the confidence to know that you will succeed with that particular trading strategy. So to become a successful Forex trader, you need to master technical analysis, and not only technical analysis, but also the other basics of Forex trading. If you'd like to do so, I'd recommend that you click on the playlist on your screen for more videos like this to help you in your trading journey. So see you in the next video.